not. So that's a big thing to consider and to keep in mind. Sometimes people feel like, oh, I got my house, so now I can get this car and I can get these credit cards, and you still want to hold handle on it and be prepared to refinance.
Right. That would be, you definitely don't want to do that. Definitely take care of your credit. Do what you can and pay those credit cards down. That's the biggest thing I see that increases a buyer's credit score. Any credit cards you have, pay them down. Keep them open though, because closing them will drop your score during this time. Yeah, buy your home. Don't go out accumulating a whole lot of debt, because soon as the next, say, I don't want to say COVID or thing happens in our world where they lower the interest rate dramatically, then you're not going to be available to take advantage of those lower rates if you just buy your home now and just be like, oh, I have my home. Let me just not care about what I want to do with that credit. So definitely take care of your credit. So when that time comes, you can take advantage of borrowing money at a lower rate at that time, for sure.
Okay, and one other thing I wanted to talk about was discount points, because a lot of people don't know what discount points are. So can you shed some light on discount points?
Yeah, so discount points are, when I'm getting ready to lock a rate for a buyer, there are a list of rates that you can choose from. And they might start off by saying, okay, here's a higher rate, but there's no charge to get this rate, say maybe a 6%. But you can get, say, a 5.5, but that charge for that 5.5 might be, say, $2,500. That $2,500 is charged to the closing cost. That's a one-time charge. However, sometimes it is beneficial when rates now are creeping up a little bit. And if rates is something you're concerned about, then you might want to consider doing one of those one-time charges to kind of buy down those rates. Because if you buy a lower rate, that's over the life of the loan, the 30-year period, or however long you choose to lock your loan in for. So yeah, I think that people should be considering that. I think that people should also think about, I mean, it's great to get in a home with no money, but I think it's a little bit unrealistic not to be planning to spend some money when purchasing a home, whether that's you buying down rates, you putting down payment, or you even need to pay closing costs. Although I think sellers need to start helping a lot more as it relates to closing costs as well.
I'm glad you mentioned that, all those things. So I want to
Mhm.
tackle each thing one by one.
Okay.
The first thing I want to talk about is how you mentioned the discount points can be added in at closing. And I want to emphasize on that, because a lot of buyers want to know what's in the closing costs. Like, what is this? And you do have a closing disclosure, which should
Yes.
label everything that it is.
Yes.
However, it's nice to hear about these things beforehand so you know what questions to ask.
Okay.
So discount points are added in one time.
Correct. One time. So go ahead. So
And
I was gonna say, I was gonna touch on what you just talked about, what makes up the closing costs. So let's start here. Closing costs is the responsibility of the buyer, the person purchasing the home. It's the responsibility of the buyer. However, it's just nice if a seller is willing to pay all or some of those fees. And the closing costs consist of many things. A, any discount points that you choose to have or you're required to have, any underwriting fees for the cost for getting your loan done. There's also insurance, interest, taxes, recording fees, title company fees. It's all of those different fees on that sheet that you have to pay up front. For example, taxes. Taxes a lot of times are collected for the whole year, added to that closing cost, so your taxes can be paid in ahead for when you begin to make your mortgage payments. Same thing with insurance. So if say insurance is like $2,000 for the year, well, they're going to collect a whole $2,000 plus so many months of reserved uh, insurance as well. So they might say, I have this 1 year plus another 3 or 4 months kind of held in escrow. So you can always stay ahead on your escrow. Therefore, down the line, when if your insurance goes up or even if it stays the same, you have a bank of extra money for your insurance and for your taxes. So insurance I mean, the closing cost is pretty much a bunch of different fees. Insurance, underwriting fees, uh, discount points for the rate, uh, taxes, insurance. It's just all those different fees added up into that one sheet on what they call a closing disclosure.
okay, and I'm glad you mentioned that and laid that out. So that's what your closing cost is. Now, sellers, what you have to keep in mind is insurance is a major part of that. You know, she just mentioned not only is the amount for the year, but they're also taking out a few extra months added
Yes.
in. So I want to talk about as far as the market, and I saw JJ Simmons mention in the chat that we are not in a recession. So, for the sake of the title of this show
Okay.
and the announcement
You're
that
right.
was made by the government saying that we were in a recession, that's why we're having this conversation.
True, true,
However,
true.
I do agree that I wouldn't call the market we're in right now quite a recession. I don't know what the term is because I'm no expert. But I really don't think the experts know, because when have we ever been coming straight off a pandemic with historically low interest rates that just
Right.
don't make sense for years? Like at least 2 years, you could get 2%. Like that has never been heard of.
Mm-hmm.
So that's historical to happen. The pandemic was the greatest year in real estate ever. So a lot of people were buying real estate sight unseen during the pandemic and
Yes.
taking advantage of those rates. So what's happening in the market is that it did not crash.
Right.
We're not in the recession. What it's doing is correcting itself. Everything
Yes.
that's happening has been unheard of. It's trying to stabilize itself. And another big part of it, and where the confusion lies with New Orleans in our local market, is that nationally, when something like this happens, sales prices go down
Mm-hmm.
because the
Correct.
interest rates go up.
Yeah. Correct.
However, in our local market, we do not have inventory.
Mm-hmm.
We don't
And
have
that's
a
happening still a lot of places too. It's not just here. It's a lot of places.
Yeah, we've
Um.
been dealing with this for a while. So I want everyone to kind of put that into perspective, right?
Yeah.
You would think that the price will go down.
Yeah.
But if there's not a lot of houses, you still have buyers that need homes, that need places
Yes.
to live, right? So
Right.
sellers, they may not be getting this crazy amount of offers that they were once getting, but there's still situations where they're getting multiple offers, right?
Yeah, I think if you see houses going down, it's probably a little bit here in our area because we still have a supply and demand issue. And I'm glad you mentioned about us not being in a recession. And let's just say, I think if I understand correctly, a recession is kind of when we have two consecutive quarters of where the numbers are pretty much down. But that's not in numbers being down as a whole doesn't mean that the real estate market is down. No, the real estate market, as you're saying, is balancing and correcting itself, as you said. There's still supply and demand that have to be considered here. So there's still plenty of homes. I have plenty of agents looking for what their buyers who are struggling to find homes still. So don't get caught up in all of this. Oh, it's not. I've heard people say it's not a good time to buy a house. There's not enough houses. And what do you think is going to happen if we continue to wait? I've seen where customers have waited, say 6 months. So that house was maybe 300,000. You waited 6 months, it's now 320. So I've never seen where a buyer has waited and they paid less for the sale of their home. The home is still a commodity that people need. That everyone needs somewhere to live. So I was around when what they said a market crash or real estate crash happened in '08. And I'm not seeing any evidence of that happening right now at all. In '08, you barely had people even trying to really shop. Nobody could shop. They didn't have really products that were attractive to people to want to buy a mortgage at all. Now, all type of different underwriting and banks and companies are doing things to say, hey, well, maybe we can help with your down payment. Maybe we can lower we down now to a 580 minimum credit score, where I don't know if you remember, but I'm going to say around the height of the COVID, a lot of underwriters wasn't even looking at anything under 640. But magically, we can go down to a 580. Why do you think that is? They want to keep the housing market going because they want to keep that revenue to keep, real estate is one of the biggest things that people get rich off. They want to keep that boat moving. However, they won't want it to be kind of like it was for the whole time for COVID. They need to slow it down. They, to balance things out a little bit. So don't get caught up in, oh, it's not a good time. It's not this, it's not that. You see plenty of people still getting their keys every time you look around, for sure.
And that's facts. And the
Mm-hmm.
weight gain. The
Yeah.
weight gain can hurt you because my clients that were maybe qualified for the 215, 220s, and I showed them possibilities that maybe weren't their first choice, but could have worked, that they turned down. Now they can't qualify for those because the rates have gone up.
That definitely happened.
So they're saying, well, don't sleep on it right now because somebody else already wrote the offer is true. So that's for the buyers, and for the sellers, be considerate of closing costs because the buyers are going to need them. We had Aisha Briscoe on the show last, and we talked about insurance. And she talked to us about what's happening with, the insurance companies and how they are writing with only a few companies. So that is affecting the rate. So that's something to just be aware of.
Yeah. Insurance prices this is probably my first time seeing it like that, but I have been talking to some insurance reps the last 2 weeks or so, and they're expecting to see that kind of start to begin to level off now. I think we did good with the hurricane season so far. Let's cross our fingers. If that continues to be that way, I do expect maybe in another 2 or 3 months, we should start seeing insurance premiums go down to where it'll help those payments go down monthly as well. So I wouldn't be concerned about that. That's something that doesn't typically happen. When Katrina happened, eventually the government stepped in and said, hey, no, you guys have to offer some type of affordable insurance to our buyers. I think the insurance thing is just something we got to kind of wait out just a little bit, and that will balance off for sure.
I agree with you. It definitely is. And, I always say, like, these things, the insurance is like, man, I'm in this love relationship with New Orleans. Everything is coming at us. When we still together, we still here.
Yes. And we're going to continue to be here. Think about it. People came from all over and made our market do what it's doing right now. You don't think those investors are coming here because there's not, value here? So I get so irritated when you hear buyers and people who live here. Sometimes when you're close to something, you might not know how valuable I am. So when you live here, you may not know how valuable your city is. But if you look past some of the negative things that are happening in our city, as investors do when they're coming from out of town, then you can see the value if you're looking to be in real estate. Because I don't know if you realize, you being an agent, you've seen those investors come in, take a neighborhood to buy a house in a neighborhood that maybe before Katrina, people was like, oh no, I don't want to live up there. And they've taken that same home, fixed that home, and now it's beautiful and it's worth 3 times the amount or maybe more, So I think that... I'm sorry. I was going to say, I think that we have to, our buyers, especially, our buyers have to be educated and understand that, listen, there's value right here. If everyone's coming here, we need to look at the numbers and really do some real research. I'd rather a buyer start to really research numbers and research what's actually happened, and stop listening to auntie and uncle who bought a house 40 years ago, and like look at what the numbers are going to say. If you don't trust me, your loan officer, you don't trust your agent, then trust the numbers. The numbers won't lie to you. People are buying homes every single day. You think they would be doing that if it was a bad time to buy real estate? So I would everybody got to get out their own way. Stop being afraid. The cost is the cost. I think it's just now time to continue to buy, because what's going to happen, we're going to look up and it's going to be 7.5%, 8%. And then you're going to say, well, I should have bought when it was between 5 and 6. Or I should have bought when it was between, but you got to deal with what's happening in the moment and just deal with what you control in that moment, for sure. Do not live in fear,
The word.
Yes.
So, you said a lot there. I want to unpack some of it.
Okay.
About the value of the city. I'm so passionate about that because there are developers who came to the city and made their own comps. They bought real estate.
Yes.
Right? To sell. There's nothing else like what they sold. So now it's a comp for the next one that they sell, and so on and so forth. Which forced a lot of people out of neighborhoods. So That's what priced people out of Treme. So working class people who actually work in the French Quarter in the service industry cannot afford to live or buy any houses in that area, and soon they won't be able to afford to rent them if the insurance rates keep going up. So that's a real deal. Like this is
Yeah.
really happening.
Yeah.
So how can we control this, right? I talk
Yeah.
about that's what this show is all about.
Mm-hmm.
Just whoever has the land makes the rules.
Whoever has the land makes the rules, right? Meaning you have to buy the properties. We have to be the owners. And I wanted to, you talking about that makes me ask you about this because I am a resident of New Orleans East. And I promise you, there's a lot of online backwards and forward about the New Orleans East. But I'm living here. I'm seeing some things happen here. However, I think when they renovated the uptown area, a lot of those people shifted to the east, and then the east began to have problems that they didn't have in the past, which crime, kind of went up, and is well, crime's up everywhere right now, but it kind of went up more in the east. And for some of us starting to believe like that hype, but you still see people who are buying homes in the east, and the east is still over 70% home ownership. So for those areas that are not, would you say they'll, if you hadn't, either whether it's investors or people who are even from the community said, you know what, let me go look in that neighborhood that maybe is so good, and you kind of focused on let's make those houses better. Do you think we have an opportunity where we can have buyers starting to do that before the investors take over it completely? Because they're coming, they're already here in New Orleans East. So I think that people who live here and want to be investors probably need to look at that as well.
You pose a really good point
Mm-hmm.
because people say, "Oh, I got this great deal. I got this great deal," and then you
Mm-hmm.
see it, and you're like, "That's the
Right.
deal." Like, you
No,
know,
no, that's a good deal. Right.
right?
Right.
Um, so, and it's because when you're looking at it from a naked eye, it don't look like a gym to you because
Right.
it may not be a gym yet. Because if it
Yes.
was already a gym, you wouldn't have gotten it for the price you got it for.
Right.
It
Right.
wouldn't be the deal.
Right.
That's first of all. So really catching the deal is being ahead of the market. Does that
Mm.
mean that you may have to buy in whole and wait it out? Yes, you may have
Okay.
to buy in whole and wait it out. And
Right.
we keeping it real. Waiting out
Right.
might mean buying hiring a property manager because you don't
Mm.
want the property yourself.
Right.
Okay,
Right.
while you hold the property. But
Right.
it's a great idea to do those things.
Mm-hmm.
If you already live in the east and there's lots of abandoned properties near you, get with the city, find out
Mm-hmm.
about these things.
Right.
The city most of the time owns a lot of these properties that are abandoned since Katrina.
Okay. Okay.
So really it's gonna be about doing things that are uncomfortable for a little while.
Right. Playing
And
along there.
I hate, and that's frankly what it is. And I
Right.
actually have a property in New Orleans East that I'm selling. Um,
Okay.
I can invest more on other projects. But
Okay.
one of the reasons why I thought it would be a good idea to sell right now is because the market is booming there. I mean, if you're a person that's really willing to do the work and hold and
Yes.
waiting out. We have some major things. We have Councilman, I don't know if he's a councilman, Oliver Thomas. I don't
Oh
know
yeah,
what.
he's a councilman. Yes. Mm-hmm.
He is a huge advocate for New Orleans East, and I am so happy that he's there and he advocates. And you have other people like him. You have Reggie Art that was a guest to the show as well, that's working on the
Okay.
Lincoln Beach project. So
Oh, okay. I remember him. Mm-hmm.
yes. So it's a lot of people that are from here that have really taken ownership of the East. And this has so much potential geographically. If you look on the map, is the lake is right there, right?
Right. It is. Mm-hmm.
You got the lake. You have an airport. You have
Yeah.
all that levee, right?
Yes. Mm-hmm.
All of Haynes should be prime real estate.
Mm.
Going down Haynes should be like going down a service road with
Right.
commercial businesses aligned.
Right. Yeah.
So it definitely has potential. There's land in New Orleans East to build on.
Yes.
So it has the potential, and I feel like New Orleans East will get there. And I'm just praying that the crime stops, because we're gonna be the people who suffer in
For
between
that.
that time,
True.
you know.
True.
And we're
Right.
only messing up things for ourselves,
Right. Right.
because all that'll happen is, one, development will take longer because investors will be more afraid to invest into the
No,
community.
that's true. That's true. Or they don't want to loan any money there. Like, no, maybe not. We'll wait. Yeah,
And I had
exactly.
a situation like that when an
Hmm.
investor wanted to do an investment in New Orleans East, and the lender said no, and it was a commercial loan. So
Hmm.
the lender did have the right to say no
Right.
to that investment.
Right.
So it's definitely something that I'm praying gets better.
Yeah.
Still some fabulous neighborhoods in New Orleans East. And also, you got to consider how huge New Orleans East is. Thank you for the handed map. New Orleans East is a huge area. So when you say the East, right, compared to the other segments of the city, it seems
Right.
that there's pockets of the East that are bad.
Yes.
All of the
Yeah.
East is this way.
Exactly.
I love
Exactly.
Lake Willow. I love Lake
Hmm.
Barrington.
Hmm.
East
Spring
Oak,
Lake is good. Yes.
Lake Carmel.
Yes. All those very nice neighborhoods. Yeah.
Sure, you used to have it going on if you lived in the East.
Yes. Yes. And it's, a lot of people still do, but I think the negative talk has now surpassed the idea of living in the East being like a great place. I do think there's some business people who are trying to change that, as well. So I brought up the East because a lot of first time home, I don't want to live in the East. I don't want to, but I just saw a crime report where they looked at it. They talk about the crime in the East more for whatever the agenda is.
Mm-hmm.
But if you look at the crime report, those incidents are happening all over. However, they're highlighting it when it happens in the East. So a lot of times, the good thing about the East, those houses have nice sizes on them. They're perfect for a first time home buyer in a lot of cases. But a lot of our first time home buyers are running from the East. They want to, and then they wonder why they can't find anything. You're running from where you're supposed to run to. I don't know which one of those rappers said it, and they talk about you have to buy up your hood. But we're
Yes,
still in that mentality about running from it. If you buy it and you're a homeowner, that's you one step closer to changing whatever is happening in that neighborhood. So when you buy here and you've told your friends and your family, they're like, oh, other people are okay with coming there because they saw you came there. And if you the homeowner and you're the hard worker and more of you start coming there, then now you're kind of running out some of the problems if more people become homeowners. So now we'll go from 70% to maybe 85%. And maybe that helps the crime go down as well. So just something to think about. Everybody's so fixated on, not coming to the East, not doing this, not doing that, or going to the neighborhood that may not be their first choice. I'm saying the East because that's an area we know that people can go to, but it could be other areas as well, across the river and stuff like that. I don't want to live here. I don't want to live there, right? But I think that people have to start thinking about that first home as an investment. See,
yes,
because people are moving every 3 to 5 years. Sometimes that first home, you're not thinking, let me live here for the next, 20 years. You're thinking, let me get my foot started in real estate. So maybe that first home is the starter home. It's just the starter home. It gets you started. It stops you from paying somebody else's mortgage. And you can, after maybe a couple of years, you can sell it and get some money back, or you can then rent it out to help you pay for the next one you're going to buy. I think our mentality around home ownership, especially people of color, we have to broaden our thinking as it relates to becoming homeowners. I think it's the biggest problem because if your credit's not ready, we can help you get ready, right?
yes,
If you haven't saved any money, maybe you can take from 401k. Maybe you can ask a family member. Maybe you can come up with a couple of months where you can just save enough for your down payment. Or maybe you qualify for USDA where there was no money down. And someone like yourself can get them 6% in closing because now you've told the sellers to pay closing costs. So if you really want to buy a home, just got to figure out where you are in the process, what assistance you need, but more importantly, what is it you have to do to plan to become a homeowner. And I'm thinking from the time that I speak to you and the time that you really become, let's just say you have worst case scenario, credit's not that good, you don't have that much money. 3 to 6 months should be the longest you're thinking about becoming ready to purchase your home. Anything longer than that, we're procrastinating.
Yeah, and that's a big deal because after that you have to rerun the credit anyway, right?
You got to run the credit and everything, though. And the only reason I might say 6 months for some people, it might be credit and money, or whatever. Just giving a little bit of leeway. But 3 months is pretty standard. 6 months, maybe your situation is more severe than most people, you know. So maybe you needed some more time. Maybe you haven't been working on a job for 2 years or something like that. So 3 to 6 months max. If your goal is to purchase a home, it shouldn't take longer than that. Because if we get you with a credit repair person and you're starting to do that work right now, then in about 3 months, your credit should be looking how it is. The minimum is a 580. So if you just care a little bit, we could get to that.
Okay, and I want to bring up that if you have a 580 credit score and your interest rate is 6%, that's still good.
It's very, very good. Understand the way it works is the lower your credit, the higher the interest rate. So but the better your credit, you can qualify for lower rates at less cost. That's pretty much how it is. No different from a car note or any other credit that you'll get. If your credit's pretty high, you qualify for the highest, or you qualify for the lowest credit interest rate. But if your credit's a little lower, you're gonna get a little bit higher rate. But I look at it like this for my low credit people. You be like, oh, I just want to get my credit higher so I can get a lower rate. You're worrying about rate when you're currently paying 100% to rent from someone else. So rate shouldn't be your concern when your credit's kind of at the border, the lowest. Your interest rate is not your concern. You just want to go from paying 100% interest rate to your landlord. You went from 100 to at least between 6 and probably 7% at 580. So there shouldn't be a concern about interest at that point, because you're giving 100% away.
Yeah, and that's a big thing because I do the first time homeowners classes, and I noticed that people's mindset is, oh, this is gonna be my house, and I'm like, you're gonna sell this house, like,
yeah,
not your house forever. Like in a few
right.
years, you be calling me back. We're gonna put it on the market. You're gonna move on to something bigger, or you may want to downsize, but this is not your end all. And
Yeah.
the people that I helped when I first started in the business and I got to sell their homes, made a very significant profit. So that also taught me a lesson in my career and what I do, that you really can't go wrong. You gotta just, if you wait it out, you can't go wrong. I mean, the people who brought real estate after Katrina cashed out, did fantastic.
Even 2 years ago.
Even 2 years ago. And it's just been beautiful what it has done for people and how it changed people's lives. So another thing I want to talk about, you mentioned how people say they want to wait because of the low credit score and they're concerned about fees.
Right.
Multifamily. If you have a renter on one side, that takes care of everything, all the fees, anything.
Yeah.
You live on the other side rent free. How long they gotta live there?
12 months.
12 months.
Yes. 12 months. Live there.
And then you use that as an opportunity to maybe take out some money into another investment. You can use that. First of all, you guys can include that income towards what they qualify for their single family home.
Yes. I would like to say like this, real estate is supposed to be like this. Now they may, and because of what's happening in the market in this moment, they may have to stretch out just a little bit. So when you go into multifamily, it's supposed to be 4, 3, 2, 1. You start off with your 4 unit, your 3, and your 2 and your 1. The only thing I would say to that though is, say you start off with a 4 unit, carry at least what your payment for that 4 unit is as income on your taxes. Why? So we can leave the availability, your buying power available, right? So, because a lot of people like to get into multifamily and then they didn't claim any of the rental income at all, and now they're ready to move to the next thing, but because you didn't claim any rental income, then it looks like you can't afford the next home. So I would say, so people who are looking to really do this the right way, you start with a 4, 3, 2, 1. And as long as you're carrying income, some of that rental income for the whatever you're paying on it, then you would always have the availability to continue to buy the next one, if that makes sense. So I'm glad you brought up multifamily. A lot of people, the first home, they're thinking, oh, it has to be the one I'm about to die in, pretty much. No, the first home needs to be an investment so we can set you up the right way. And the only reason
Yeah.
why I said they might need to stretch out right now is because the prices of those 4 units and 3 units are kind of up there a little bit. So some people will be able to qualify for how those are right now, but I think you might have to go outside of our area a little bit to get the numbers that they might be looking for in terms of the sales price. But I think that people who are looking to get into real estate the right way and they're okay with starting off with multifamily should look at it in that way. I'm gonna buy a 4-plex, I'm gonna buy a 3-plex, I'm gonna buy a 2, and then eventually I'll buy a 1. If we're trying
Yeah.
to really
I didn't
build,
know that.
financial wealth.
I wish I would have known that.
Yes. Yeah.
I
We
bought a
first.
2 and then a 1.
Mm-hmm.
The 1 was,
Right.
yeah.
Right.
I should have got a 4-plex first, in hindsight. But that's why we're doing this show, so y'all don't have to make mistakes.
Exactly. And you can go FHA. FHA, of course. FHA lets you go up to a 4-unit. First time buying a home, you're only putting 3.5% down. That's whether you're move-in ready or it's a rehab, right? You can go FHA with that. And each one that you're gonna live in, you can go FHA. Now, once you've gone FHA and you've lived in it for a year, you may refinance that into conventional, then you go to your next FHA. So there's a many ways to kind of do this, but I think it's important that you are doing this show to help change the minds of people who are missing out on opportunities, but still every day they're paying a mortgage, they're just not paying their own.
Yeah, or you may have a property and want to know, okay, I thought about investing in another property, but I wasn't sure. It's always a good time.
It's always right now. It's always a good time to buy real estate. It's a asset that's appreciating in value. I don't know why we get so much backwards and forward about a house, but they'll go buy a car and not think anything of it. And as soon as they bought that $50,000 car and now they pulled off the lot with it, it's no longer worth what you paid for it. So it's just a no-brainer. I think now we're in a place where it's just time for our mindsets to be what it is and people to go ahead and push the button and apply.
That's very true. And I can tell you this, we touched on a lot of nuggets. Mindset was the biggest thing, just reshaping the way we think about things and just being realistic, right? Because it's going to be a struggle. I mean, when I didn't went up in some of these houses, you'd be surprised at some of the stuff I see.
Really?
I didn't walk into a hoarder's nest. I didn't walk into the cat lady house, a million cats.
Right.
I mean, I walked into some things, and
right.
Some of the buyers have been like, "I'll take it," and even I was like, "Wait, really?" What? I wasn't the one.
Right. I didn't think you was gonna choose that one.
They saw it and they ran with it, and you'll be surprised what they did with it. So you have to be an innovative person, even if you're not an innovative person.
Right.
Instagram, HGTV, Pinterest.
Yeah, YouTube, the information is there. Right.
We're living in the information age, so none of us have an excuse to not know anything.
Yes. Yeah.
I found this app where you can hire people and look at their reviews. Contractors see their work on the app. There's an app for everything. So
right. Take advantage of it.
Don't do your research on Zillow. That's my own
That's right.
Professional, do not do Zillow.
Not Zillow, right.
So one other thing that I wanted to kind of touch on with everyone, because I know you see this a lot in your business, is people who want to shop around, right? So let's talk to them because they don't know, and you don't know what you don't know. So let's talk about it.
And you mean shop around as it relates to mortgages, right?
Yes.
Right. So the thing is, anything you're doing with your credit as a loan officer, we have to explain. So let's just say a buyer who's shopping too much sometimes appears to be unsure of themselves. When you have your situation kind of together, your scores are good. You're not going to be shopping around all over the place. You understand how it works. Rates are not about, for me, I know that I'm not trying to push a high rate on you at all. You guys don't pay me. I get paid from the underwriting company who we approve your loans through, right? So whatever the best rate is available, you're going to get a choice of which one to choose. So there's no need to bounce around from loan officer to loan officer trying to find the best rate. It doesn't work like that. The best rate is the best rate you're willing to pay for. I will say this, the biggest difference too is I would encourage most buyers to come directly to a mortgage broker, because the bank, yes, they do mortgages. They're not necessarily in the mortgage business. On the mortgage broker side, this is all we do. So we're going to have the best interest rates. You're going to have the more one-on-one service. Whatever questions you have, you can come to us directly. I've closed so many deals behind somebody I'm talking about 700 credit scores, 750 credit scores. And when I get it, I'm looking for the problem. It wasn't that it was a problem for the bank. Maybe the loan amount wasn't high enough. Or maybe there was one thing we had to fix. They don't want to have to do any of those things. They want it to be open and shut. Well, sometimes you can have a 700 credit score, but maybe there was a little gap in the job and I have to write a letter explaining why there was a gap in the job. The bank doesn't want to do any of that extra stuff. They want it to be clean, clear, and just open and shut. So definitely come to a mortgage broker. But aside from that, it doesn't look good that you hopping around from loan officer to loan officer and everyone's pulling your credit. Just choose somebody that you trust who's going to be honest with you, like myself. And then we can choose interest rates together and what best fits your need. You're going to decide on which rate you're okay with or which rate you're okay with paying for, if that makes sense.
Yeah, and they say that it's not supposed to hurt your credit score, but I think it does. Like,
yeah,
I have clients call me all the time and say, "Oh, I tried to see if I could get better numbers and my credit score went down." I'm like, "What?" And they're like, "Yeah, like so every time you pull your credit, the score does go down."
It does go down, and we have to explain each and every inquiry on that, because it looks like to the underwriter, to the lender, that they assume that every time you've gotten your credit pulled that you've opened up a new debt. So it creates more problems than answers. I would just say, talk to your loan officer when you're speaking to them. Have a good time. Don't be in like a super rush. Ask all the questions you need to ask. If that loan officer does not want to answer all your questions, then maybe that's a person you don't want to let pull your credit. Have more conversation with your loan officer before y'all pull credit. Like, be patient enough in that sense, but don't drag your feet, but just ask the questions that you need. And once those questions are answered, then you decide, okay, this is the loan officer I'm going with, and that's what I'm going to use. And then that person can pull my credit.
And also be upfront with what you have going on, because when they check your credit, they're going to know all your business. And when I tell you all of it, by the end of the deal, they're going to know more about you than anybody that you know about yourself. So just be upfront and tell them, and that way they can say, "Oh, well, this could work," or "No, it can't work," before they pull your credit, all to find out it can work.
Right. Don't be afraid to say all of that stuff, because I think some people think maybe the loan officer cares about that or whatever. I'm not sure. We're not really concerned about whatever you have going on. We just need to know, because I can't give you all the rules right off the bat. But if hey, I had a foreclosure last week and maybe it's not showing, but then the underwriters have ran your name and they see it. Now you've spent money on all the inspections and plumbing and all this different stuff, when had you told me, I would have said, well, no, we can't do it this way. Maybe let's try your spouse, or is there another co-signer? We could have tried any other options first. And then if there wasn't, then I would not have pulled your credit and put that hit on there. Then maybe we needed to just wait for that to kind of fall off. I'm using foreclosure, but it could have been anything. Let's just talk about what you think you got going on. And then that way I know how to move around. In this business, it's kind of like we're playing spades. And any of your spades players out there, if you play spades, once you show your hand to an underwriter, now they know what to play. Now they know whether to deny. Once they see it, then they can't unsee it, once they, but if you know what's in the hand, if you know how to play the hand. So that's what mortgages really is. That there's so many rules and they're constantly changing for us. So definitely always refer back to your loan officers as it relates to anything related to the actual mortgage. And then you contact a realtor for anything related to the house or negotiations of the house. because there's too many rules for you to fully understand it. But it's important for you to tell us, the truth about what's going on.
Yes.
Mhm.
Keep it real.
Keep it real. Like I'm not gonna judge. I promise you, I'm not gonna judge you. I'm automatically thinking, "Oh, can I fix this? Can we work around this? Can we make this work?" But if I don't know it and it pops up after I've showed my hand, then that's where the decline comes in at. But if you told me up front, then I'll know what we can and can't do. So definitely be free. That's why you got to deal with somebody that you trust, who's gonna be honest with you and
Yes.
not just gonna tell you what you want to hear. Most people are going to work for you if you're pretty nice and you're honest about what's happening. Most people are going to be honest with you. Or I'll speak for myself. I'll be honest with you and say, hey, this is what we're dealing with. This is what we can do. This is what we can't do. But some customers come in very, very strong and they appear to know what they're talking about as it relates to mortgages. But then you get into it, you realize that person doesn't really know much at all about mortgages. So they didn't tell you this, didn't tell you that. Then now you're in a space where you can't get a deal done. My close rate is over 95%. I like to keep it that way. But that's because most of my buyers are going to tell me the truth about what's going on. But if you lie to me, there's nothing I could do to fix it.
And that was a word right there, y'all. So hopefully we share some gems. I just want to also touch base about inventory. Our inventory is still lacking. So if you or anyone you know is looking to sell, please contact me. I have buyers ready to buy.
Yes, plenty of them. And we're ready to approve you too.
Yes. And also, if you're thinking about buying a house, there's really no reason not to buy a house. If you're renting right now, you should be buying it. Or you should be working towards buying it. So definitely let's get this conversation started, see where you are, and get you in a home and get you in there because it's really a marathon and we gotta start somewhere.
It really is a marathon, that's correct, for sure.
Yes. Well, thank you so much, Miss Nadedge Booth.
Thank you for having me.
And you guys, thank you for listening in. I hope you got some gems tonight. As always, we appreciate you. New Orleans Home Search Podcast.